The yen carry trade. What is it and why is it rocking the markets? Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, welcome back, Alex, and I can think of no one better to break down what's been happening as we stabilize a little bit after the chaos earlier in the week. How are you going today, Alex?
Stable yesterday, not so stable today.
True. I said a little bit. We're certainly
A little bit
we're
better.
certainly not out of the woods necessarily.
No.
Well, I mean, we've been talking about this all week. I know amongst ourselves, and even we mentioned it on Monday in Insights with Sam, and a lot has happened. We've had a lot of volatility in the markets, really quite chaotic. We've brushed on it before, but we haven't really dug deep. So, can you start us off by really explaining the basics of what's going on here with this yen carry trade?
All right. So a carry trade is basically when an interest rate environment in one area is so much less than another area that you borrow money in that. So in Japan, which is what's been going on for the last since about 1999, and then you buy US assets with it. So you convert the yen to US. Now, it has become much more significant since about 2022 when the yen started depreciating against the US dollar. So people were getting a double win in Japan, despite the fact that their wealth was being depreciated because the yen was losing money. Ultimately, if they bought assets, especially say the Magnificent Seven stocks overseas, other ones that they've done is Brazilian stock market, really high growth, high yield stocks and assets. Not only did they get the interest rate differential, they also got the uplift on the depreciation of the yen. So it has just grown and grown and grown. The reason it's grown so significantly since 2022 was because that's the environment where the rest of the world started lifting interest rates and Japan just held at negative 0.1%. And so the differential became so much bigger, it became so much more worthwhile doing it.
And we made this point earlier in the week, and I've actually seen people respond on, I think it was on CNBC I was watching, and there was someone there going, oh, but, it probably isn't that big because you're only talking about people who are using that specific trade that you just described. My point on that was that might be where something like this starts, but it can have very widespread consequences. And I think that's what we're seeing in those market reactions, because we had very large market reactions that aren't just related to a few people using that trade, because I imagine there would be flow-on consequences, wouldn't there? Like if you've got people taking advantage of that, when it starts to unwind, it impacts other things. Like it's a contagion effect. Is that how you see it?
It's basically because the liquidity gets pulled out of the market. So these individuals in Japan or these companies in Japan are taking back their yen dollars, their US dollars, turning it into yen and paying back loans, and the liquidity from the markets is going. So that's why the volatility is going so crazy. And it doesn't therefore just affect currencies, it affects assets because they're pulling it out of everything.
And we've seen that traditionally. You sell, the argument is you sell whatever you can, right? Like, and that is why often liquid assets like gold, I know is always an example, you often see that dip. I actually thought gold held up remarkably well given how volatile it actually was.
It was just interesting. I mean, it went up from what was it, 2420 on the day to 2460 nearly, and then all the way back down. So, like, you don't usually see $50 plus moves in a day in gold. In fact, I think it went down to 23660, didn't it? Or 67.
It was certainly
somewhere close, just to be exact. But so yeah, it was nearly $100 swing, which is just enormous, and silver as well. So silver did not hold up as well, I guess, but silver is now holding better than gold. So we'll see what happens. That's usually a good indicator that it'll return.
Yeah. So do you think if we look at sort of the longer term impacts of this, do we end up in a similar situation? I know you tend to look also at the potential for the US dollar here. Is what are the longer term implications of what's gone on there? I suspect you don't think it's done. Like, this isn't the end of it.
Well, the yen sat around 100 USD to JPY since about 1999 when Japan just went ultra low interest rates. 2008, I think they lifted their interest rates to 0.25%. That was their equivalent of our 7-8% at the time. So that's been all their moves in 25 years. So they've got 25 years of carry trade to unwind. They've got the yen right now sitting at 146. So they've got from 100 gone up to 160. That's when everything started breaking down. Very quickly, we reversed to 142, back up to 146 now. But we've got between 100 and 146 still to go. And that is going to be the longer term, probably bigger debt, really. Like the first bit's the easy bit. The rest of it's a mountain to climb. So it seems to me like there's a huge mountain in reversals still to come. Bank of Japan today came out and basically said if markets remain volatile like this, they won't be changing rates, which is great. But Bank of Japan is its own little island. I mean, you've got Australia, you've got the US. The US there was a 60% chance this week that the market was pricing in that the Fed was going to jump in on this move and drop rates, which ultimately is the problem. If Japan and the rest of the world become closer in rates, the more rapidly this is going to be undone, the more rapidly the US dollar depreciates. And it's not just Japan, which is a problem.
And they definitely are linked, like all in together. And I worry a little bit about that of this longer term time horizon, because I know we spoke about it earlier today, the potential that you could see markets really react quite positively in the short term, but does it ultimately set up for quite a substantial more of this chaos that we got a little hint of early in the week down the track when it really unwinds again? Because even for them to say, well, we won't touch rates now while the markets are unstable, well, that's not saying they won't touch them again. It's just saying we won't do it right now.
Yeah. Well, I mean, right. Yeah, absolutely. And right now, inflation in the US, they're talking is sub 2. Japan in May recorded 0.5% month on month, which, I mean, they're not up at 6%, but month on month, that was a 6% hit to inflation. If that continues, they don't have a choice. And I mean, we can go into all the reasons the US is in the position they are, but they're going to be forced to drop rates very soon. Government spending, as we've spoken about, has just created too much chaos. They've pushed their inflation around the world. If their dollar starts depreciating, which is the likely outcome from here, especially against the yen, the inflation all goes back to the US in an environment where they will be dropping rates. So this is going to cause bigger inflation in the US, and ultimately, you and I have spoken about all the different types of inflation being demand pull, which is usually government spending related, and that all the central banks right now have been raising interest rates to combat demand pull inflation, which interest rates do not combat. So we've been raising rates fundamentally into what should have been transitory inflation. Then the government kept spending, so transitory suddenly became not transitory, but ultimately it still was. It should have diminished and gone away. And that's what we're seeing right now, because governments have spent their way out of recessions or out of what could have been a recession and destroyed businesses by doing so and lifting rates and dampening actual economic demand as opposed to government demand. And what is going to happen now is if this inflation comes back in, that is going to be the right inflation to raise interest rates into, and we've got no room to do it.
And that is what I worry about, exactly that point you just made, the time when they really need to use that policy because they got it the wrong way around, they're not going to have the tool available.
They've made this situation significantly worse, just like what we were talking about, what happened between 2022 and 2024, which is when they started doing it, they have made the carry trade that much bigger and that much worse.
And just to wrap this up, obviously this concept of currency debasement, which is where all of this leads, is the fuel that lights the fire under gold and silver. What's your view on that in relation to everything we've been talking about here? Is that, you know, we see the volatility in the short term, but longer term, it's pretty much a no-brainer. How do you view it?
Well, I mean, volatility is going to be crazy. The VIX on Monday was the highest it's been since 2008, I think, or even higher. So volatility is going to be crazy as the liquidity leaves the market. Now, ultimately, asset prices should drop. Perhaps gold and silver will not, because people will be wanting to use it as a hedge. But the reason they may not is because they're usually a hedge almost against the depreciation of the US dollar. And ultimately, at this point, if the Fed starts dropping, we're already seeing the depreciation of the US dollar. It will be a very rapid move down for it.
So, yeah, and I think that's a really important point. Longer term, despite that volatility, all signs really point to much higher prices on the horizon. So it's probably an environment where dips are opportunities, particularly in precious metals.
And they're big dips. They're $100 dips on the day. Makes it very easy.
It makes it easy, and it's a good opportunity to take advantage of. Well, appreciate all your work on that, Alex. It's such an interesting time that we're living through. We went through a period there. It was, we could predict these things in the future, but nothing was really happening. But when it happens, boy, it happens all at once. So pretty exciting.
Exciting, terrifying.
You could use that word in multiple ways, but yeah, there's certainly a lot happening.
There is a lot happening.
But thank you for your work on that.
No worries. Thanks for having me again.
Thanks everyone for watching. We'll chat again soon.